Hey guys, today is October the 13th of 2014. I want to go over the euro dollar using price and time technical analysis, so please pause the video and read the video disclaimer. Alright, I'm going to make this quick. I just wanted to show you a couple of things that I've been looking at the euro and researching and studying and even using some tools I haven't used in a while that I know you guys noticed on my videos that I used to use a lot. And sometimes you kind of slack off when you got so many tools, but it's always good to have a lot of tools because you get to see the market in different ways, and different programs use different techniques and just different application to measure, use statistics, mathematics, astro, whatever tickles whatever tickles you and makes makes you a better successful trader you want to use. So one thing I wanted to show you on my last video, have you seen it? I was wondering when I was ever gonna get a yellow bar on my weekly euro, and this is one indicator. When it starts lighting up, it starts getting Momo for a possible change in trend. You can see we had soap signals here. It was a head fake, and now we're here and we're having all of them piled up here. This is not looking too good because the 50 is still in the very bearish camp. TIMA hasn't crossed positive. The MACD is pushing higher in the weekly, and then we're back here like in the MMG that we went up here, failed, try to go up, fail, and now we're here. So if we could get above the 50 and push higher and at least get to the 80, then I could say maybe this pivot low it's in for now. So finally we got this one. This is the week just started, so I've seen it disappear. Get up, don't get your hopes up high. Just want to show that things are looking really good. This was in a squeeze play from January, the week of the 20th, and the way the indicator works is once you see the red dots, that means that there's a squeeze play. Price is being contained, and once you get a green dot, that means the signal is in to short, and you follow the momentum wherever the bars are heading. So you can see that you were getting a little head start. I said, well, when I get a green, is that I'm going to short. So if you would have short here, you would have rode this all down and made some nice profits. So that's one of the things I wanted to show you that I've noticed that is in. You can see the price action on the daily. You got a pop, a pullback, a pop. You got the trending candles all in white above mobile band, above the 20, and you're hovering around here on the 14th candle. 14th day candle, and you have the Darvis-Bach high right here, which is the 2790. Take out that 2790, have maybe pull back, and it supports it and it starts going higher. I say it's a great entry, or anything maybe coming even lower, even testing this 87.5. But the key is that the euro needs to stay above 26.97. It's very important that it stays there. And if you want to, be less risky, wait 3 days. 3 days is a good day for this thing to show that it has potential to the upside. And then any little pullback, jump in. You can see the 12-hour. Got a nice little pop. Each candle is a 12-hour. Got a CCL, PPSL signal. Then it was a bear trap, and then they came right back and got a PPS buy signal and pushed it right up. So now we're struggling right here. Next thing I wanted to show you, this is what I wanted to show you, this chart that I haven't used in a while, and it's my gunner technique. The gunner said that you could use the 5th candle, the 8th candle, and the 21st candle. So I just want to show you that if you take, kind of messed this up right now. You take this right there and put it on the 5th candle, you can see that right now we're finding support right at this arch, which is a good thing. Anything where it finds support at a green arch, that means that it could be a possible change in trend. If you use the 8th candle, it's finding it on the red. Normally they say the red is not good to use as an arch because it can continue pushing lower like here, and here should have been support. But then it failed, and now it's hovering over here. So it all depends on the eye of the beholder. But normally, sometimes I've seen it use the red as a support and change in trend and push higher. But normally that's not the case. It's supposed to be the green for support. And you can see if you use the 21st candle, which is the pivot swing low, when it did that pop and then failed on July the 1st. Same thing. It's finding support here at the arch, and you can see that it's really working on that swing because it's the first impulse wave. And that's why people ask me why you count these, because you need to count them to know what impulse sequence you're in. That's why when they look at my numbering system, they're like, man, that's not no Elliott. And it is not Elliott. It's an old technique that I've used for years, and it's worked out great. So anyway, so you see right here is finding support. We're kind of chopping around here. I don't know what day is this, but this could be a possible, a volatile day or change in trend, or maybe a spike lower, or maybe a pop. So I just wanted to show you that. Now, if you take that and use it on the low, it was a 1, 2, 3, 4, 5, which is that spike high. That's right there. As long as you stay above the 1 by 1, I mean, this is just because it's smaller, but if you go at least 3 months, at least we get close. I just wanted to show you. There we go. Now we go down here and put it on this fifth candle, which is this one. This is the 1 by 1. This is you want to stay above. It could do whatever it wants here, back, pop, sideways, pop here. But as long as it stays above this 1 by 1, we're in good trajectory to go higher. Maybe stall and find resistance around the 31,100 around here, or in this arch or this area, and maybe pull back and maybe continue doing this leg higher. So as long as we stay above this 1 by 1, we're going to be looking good. Other than that, hope this helps, and I'll keep you posted on my thoughts. I just want to do a quick video on what I'm seeing. And this another thing, this is looking really good. This October 3rd low matches up price and time with the 24.99. I had to do a different mathematical count, and I was so quick that it never hit me, and maybe I was busy with other markets. But after figuring out why this low is holding and why the price and time, was there any connection within the price and time within the 24.99 and this October 3rd, and I found it today. So is this going to be the swing low? I don't know. Still early in the game. We got to see, if this thing starts pushing higher, and at least if it could at least get up to this what is this 27.37, and at least take out this pivot high at 20. I don't even know where. I don't even use this chart, so I don't know where the pricing is here. Here, the 1300. Oh, here it goes. At 28.55, 1300. And if we put a trend line going down, I'm sure it probably already cracked right through it. So it's looking good to the upside. Hope this helps.